Hello guys, welcome back to my channel. If you want to make $50, $100, $200, $500 urgent daily, 2k dollars daily, then this video is meant for you. So I'm back again with another powerful strategy that you can actually use to trade the volatility index. The strategy is a very powerful one, right? And it's going to be the best you will ever find in trading volatility in the market. Meanwhile, if you are here to subscribe to my YouTube channel, please hit on that subscribe button now and turn on the bell notification so that you stay up. You'll be the first person to get notified each time I'm dropping a new comment. So the strategy is a very powerful one that you can use to trade the volatility index, irrespective of the volatility that you have. Just that is a little slight different, because you can't compare volatility 75 with volatility 25. They are two different things. They are both volatility, but their variation, their psychologies are different. Their formation, everything is different. So if you want to use the strategy on another volatility index, then you must understand the pros and cons of the volatility that you are using it with. So I don't want the video to be too long. I'm going to be sharing the settings toward the end of the videos, but while I share the settings, do well to watch the video to the end. Don't skip any part of it, as you will be missing about a very interesting part of the video. So the strategy works perfectly on 1 minute time frame and 5 minute time frame, since it's a scalping strategy. Right? So we are going to be using two indicators on the main chart and two indicators on the indicator window, right? So making it 4 indicators that we're going to be using. So one thing I used to tell you people, one I used to tell my students, or I used to tell the people around me, is that if you are using an indicator, make sure you understand the pros and cons of the indicator that you are using. And make sure you understand the pros and cons of the indicator that you are using, because it's very, very important. And whatever indicator you want to use, don't forget your market structure. Your market structure is the fundamental that once you get it wrong, automatically you are going to be losing. You won't be profitable in whatever decision, whatever bias you are taking. So a very brief introduction, a very brief analogy on the market structure. Right, let me do a very brief analogy on the market structure before we move down into the indicator that we'll use as confirmation. Now looking at this, let me go to my 30-minute time frame. Okay, so looking at this, our structure here, we all agree that this is an uptrend, because for those of you that are very conversant with trend line, this is how you draw your trend line like this, right? You draw your trend line like this, and they will say, okay, this is an uptrend. Fine and good, this is an uptrend, but it doesn't mean I can't take a sell in it. I can actually take a sell once I understand my structure. And that's one major thing out of the things that I teach in my mentorship. Market structure, I do justice to it. As a matter of fact, if you understand your market structure, you can trade. You don't even need any indicator. Any indicator you'll be using is going to be an additional confirmation for you, which you don't really need. Market structure will give you the directional bias that you are going to be taking. How you frame your setup. Are you taking a buy? Are you taking a sell? Are you buying at this particular area? It is market structure that will give you those confirmation before any other thing. So looking at this structure that we have here now, we all agree that using our normal trend lines, you will see that okay, we're actually in an uptrend, but it doesn't mean I can't take a sell. Because looking, the reason why I'm taking this sell now is that looking at this now, we already have this our higher high, higher low, 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 right? Then we have this higher this mini structure, then you have this higher low. We can't call this one a higher high because it did not break the structure this previous high, so we can't call it a what, an higher high. So we have this as our what, a higher low, and we'll have this as our new higher high because it has broken the what, the structure here. We have a DML. So once they broke the structure to this upside, right, I already know that since they broke the structure, that means they've taken out the liquidity at this area here, right? That means they've taken out the liquidity at this area here, right? So I should be looking forward for a sell because after lower high, after higher high is being formed, of course we are looking forward for a lower higher low because the market cannot keep going up. There has to be what, a retracement. So this sell I'm taking now is actually a retracement, and I'm taking this sell now. I already know where my TP will be. If I'm taking my TP is going to be around this area here, I have my reason for putting my TP here, right? Because I've seen a POI at this area here, and if I'm not taking it, my PEP is going to be around this area here for the step for a long time. But for a scalping one, I'm actually here now. My TP is going to be, my first TP is this, my second TP is this, right? I have my reason for putting my TP there, right? So since we've gotten this higher high now, I can take what, I can take my sell at this area now. So let's go back and see, let's go back and see okay. So looking at this now, looking at this, right, you can see that I've gotten what I actually want, right? So the indicator we are going to be using for the confirmation, right, the indicator we are going to be using for the confirmation is no other indicator than our envelopes indicator. Envelope indicator is a very powerful indicator. It's a very powerful indicator that if you really understand how it works, you can stick to it and understand it. If you understand the pros, all you just need to just for you to understand the pros and cons of the envelope strategy. So we are going to be using two indicators on our main chart. These are our main charts. The two indicators we are going to use is going to be what, a moving average, and our indicator window we are going to be using two indicator, one envelope, or we are going to be using three indicator, right? So we are going to be using three indicators. So the first indicator we are going to be using, you click on this F here for those of you that are new. Click on this F here for those of you that are new, right? For those of you that are new, you click on this F, then you look for what, you add the first thing is moving average. The first moving average you are going to be using is, the period is 21, shift is 0, method is exponential, apply to what, apply to close. Now one thing with this moving average 21 is that for those of you that are very conversant with my channel, you always see that I always use this, alright, because moving average 21 now, EMA 21 is a trending indicator using what, in determine our trend, right? Using determine our trend, right? So that's why I'm using the what, the 21 moving average. So once you are done, you click on what, you click on done, right? You click on done. Once you are done, you click on what, you click on done. So to the second indicator we are going to be using now, you click on this F again. The moving average, if the period is 50, shift is 0, method is exponential, apply to what, apply to close. The style, you can use any style of your choice and any color of your choice. Once you are done, you click on what, you click on done, right? You click on done, you click on what, you click on done. Meanwhile, if you are yet to subscribe to my YouTube channel, please do hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. You'll be the first one to get notified. Don't forget, I said my TP is going to be at this area here, around this area here. My first TP is going to be at this area here, while my long time TP is going to be around this area here, right, around this area here. So once you are done, we are done with the what, with the main chart. Now for the indicator window, now you click on this F here again, then you click on this F here, and then the first indicator we are going to use is going to be our RSI, right, relative strength index. The period is 1, apply to close. The style is 1. Then the color has to be the what, the color of your background. If you see very well, my background is white, so I'm using a what, the style I'm using is what, is white. So the level is, now we have the 90 level, the 50 level, and the 10 level. Once you are done, you click on what? You click on done. And once you are done, you click on done, right? Then you click on this F again to add the next indicator. The next indicator we are going to be using is our what? Is our envelope. The period is 70, the shift is 0, the deviation is what? 0.90 or 0.900. Take note, for those of you that actually see my last envelope strategy, the parameters are different. Don't think it's actually the same thing. The parameters are different based on what we want to use them for, right? The parameters are different. At least for the first one, I think the period we used was 50 or 20, but the parameters are different. So take note of it. Take note of it. So once you are done, you click on what? You click on done. Once you are done, you click on done, right? Once you are done, you click on done. So let me explain how the strategy works. So one thing now is that for we to use the strategy, it works perfectly on 1 minute time frame and 5 minute time frame, since it's actually what? A scalping strategy. Remember, when we scalp, we are not staying long in the market, so that's why we always use a lower time frame, the 1 minute time frame and the 5 minute time frame, right? That's why we always use 1 minute time frame and the 5 minute time frame. So the first confirmation we are going to be looking at is that you need to look out for your structure. Check out your structure. Your structure is very, very important. Your structure is very, very important, extremely very important. I can see the first thing I did was I actually look at my structure. So once I've gotten my structure, I did what? Then I was able to frame my entry. I was able to frame my entry and take up the what? Take up the entry. I take up the what? The trade. So the first confirmation is that you have to look at your what? Your higher time frame, and look at the what? The structure that will have there, and look at the structure that will have there, and then you take your. So the second confirmation now, which is going to be coming from our indicator, right? Which is going to coming from our indicator is that now you look at this, and that is going to come at our what? At our indicator window here. It is going to come at our indicator window here. So you look at your what? Your higher time frame, which is our 5 minute time frame, and our what? And our 1 minute time frame. For the effectiveness of this strategy now, both your 5 minute time frame and 1 minute time frame has to align. They has to be the same thing. If you don't want to be taking a trade that is going to go against you, they have to be at the what? The same level. Now they have to be at the same level. Now if you look at our 1 minute time frame now, on 1 minute time frame now, when I took this entry here, you can see that my moving average, which is moving average 7, is actually at my 90 level. It's actually at my what? At my 90 level, right? Then by the time we go down to our 5 minute time frame, which is our second higher time frame, right? You will see that we will have the same thing here too. It's also aligned at our 90 level, right? It aligned at our 90 level. So that was why I was able to take that trade. So both your two time frame that you are using, your 1 minute time frame and 5 minute time frame, has to align together. They must be the same thing. They must be in the same range for you to have an effective, and that is how this strategy, that's what differentiates this strategy from every other strategy you will find on YouTube about the envelope strategy in using to trade the volatility index, right? It has to align. They have to be the same thing if you really want to enjoy the strategy. So if you want to take a sell now, the moving average now has to be at our 90 level. It has to be meeting our upper Bollinger Band, right? It has to meet our upper Bollinger Band, and it has to be at the 90 level. So once this confirmation align, and you've taken your you've checked your market structure, and you've seen that okay, you're actually in a sell, you are actually in a downtrend, or you've broken the structure to the upside, then you are taking a retracement to give you an higher low. Then you can take you can take the sell, right? You can take the sell. So that is the first confirmation you are going to be. That's the second confirmation. Meanwhile, if you actually need me to, if you are finding it very difficult to understand the market structure, you can actually drop your comments in this video if you want me to make a video about market structure. I've done that several times, but if you still need more video on market structure, you can actually comment in the video that you need me to make a you need the video of market structure. And once we get 50 comments or 50 to 100 comments, I'm going to make a video on market structure to do a deep dive on market structure. Or you actually DM me, you can actually inbox me and contact me on how you can join my mentorship, where I will do a pro deep dive in market structure, how you can be profitable by just understanding the market structure alone. All my students can actually testify. You've seen their testimony on my Telegram channel, and sometimes when I do post them on my status, or you see it on my YouTube channel. Market structure is the fundamental. If you don't understand market structure, if you don't know your market structure, your profitability in this industry will really, you can't be profitable. That's just simple facts, because it's always going to be a day on, a day off. Some days you are up, some days you are down, right? Some days you are on, some days you are down. So guys, so that is the confirmation we are going to be looking for. So for the buy now, it's still divorce. Is the reverse is the case. The reverse is the case for the buy. The buy now, the moving average has to be at our at our 10 level, and it must touch our lower Bollinger Band, our lower band of the envelope. Then once you understand that, you can take it and see when we have our buy like this. So those are the confirmation you look out for. Guys, if you actually enjoys this kind of video, please like it and share too, and hit on that subscribe button if you are yet to do so, because that is the only way you can actually encourage me to make more of this kind of videos, right? If you enjoy it, please do get to like and share, and also comment in the video. You can see it's actually moving down to my take profits. Don't forget, I said my first take profit is around this area. 1845, right? And my second TP is going to be around this area here, right? So guys, make sure you backtest very well. And don't forget your the first for a quick recap now. So the confirmation we are going to be using, the first confirmation we are using is our market structure, just for us to know where we are in the market. And the second confirmation is coming from our indicator window, which is this, right? So for the first confirmation, that is where the technical part of this, the pros of this strategy now, and that is where you might actually, if you are that don't understand market structure, you might have a problem in taking your entries about it. You can see this first buy, all this buy that I have here, I was not afraid of it at all, because I know where I'm actually going to. You can see all this buy here. If you have been, some of those are actually an amateur who understand market structure. By the time they see this buy here now, they will have closed the trade, or will have, they are panicking and say, the market has started going up. It's not what? No. Once you understand your market structure, you are good to go. Market structure is king. And don't forget your higher time frame market structure. Higher time frame market structure is king. You can't overlook it. You can't just put it aside. You have to put serious consideration to it, right? You have to put serious consideration into it. So that's the first confirmation. The second confirmation is our indicator window, right? The second confirmation is our indicator window, right, which is coming from our envelope strategy. So guys, if you enjoy this content, like it and share too, and do well to subscribe to my YouTube channel, because that is the only way you can actually encourage me to make more videos, more amazing videos like this. So guys, let's keep making the riff. See you